What is going on out there, peeps? All right. Hopefully, everybody had a good weekend. Everybody's nice and relaxed. Had to spend a day yesterday relaxing just a little bit, so I feel refreshed. So we'll see how this week goes. All right. Anyway, some very interesting news going on, and we're going to get right into it. All right. You guys know if you're thinking about buying precious metals, to check out our friends over at Money Metals Exchange. The link is down below in the description. If you are a first-time buyer and you spend more than $100, use promo code Pimpy, P-I-M-P-Y, and get a free half ounce of silver. You guys go check out our friends over there at Wall Street Silver. They're doing a great job of helping bring awareness to the silver movement. I have the link for the YouTube channel as well as their Reddit page listed down below. Feel free to come over there and join them. Okay, you guys know to look out for the frauds. Whenever I post something, there's a gray circle around my name. The people that commit fraud don't have the gray circle, and I certainly wouldn't be sending you no what apps or anything like that. Let me refresh this real quick so we can see where we are as far as gold and silver is concerned. Here we go. We got gold. They're tamping it down. That's for sure. It was teetering around the $1,900 mark. It's definitely being tampered down with right now, but silver still continues to hang around that $28 mark. It started to go down as well, but it's quickly rebounding. The same as gold. Actually, was down a little bit more than that. Here goes Bitcoin. Is this what I was talking about? Are they starting to make the run? I knew there was going to be somewhat of a run coming towards the end of this month. But I did notice something. Look at this. See these drops? They all happen around the same time. This is what I'm talking about. How does this happen? It's one thing. They're all linked together. You see what I'm saying? So how does this happen? You have to ask yourself that. How is it that they all just make a massive drop like that all at the same time? Look at these graphs. It's like they're almost all linked together. Look at them. Doop, 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 doop. How's that possible? Did they all experience the same thing at the same time? That doesn't make no sense. Meanwhile, you got XLM over here. Yeah, I don't know what's going on with XLM. But you can see, look at the way it looks. It didn't have these weird dips. Stanky chain. There it is right there. Hex. See? USD coin. Of course, Ethereum. And Bitcoin. They didn't get any of this, whatever this is. Let's take a look at it. What is this? What the hell happened? So somewhere around, I don't know, 8 o'clock, looks like about, 8 o'clock, and all of a sudden a big drop. Where the hell did it go? So it went from 32 cents and dropped all the way down to 9 cents, around 10:10. And then, around 11, it was back up. So if somehow, some way you managed to jump on it, I don't know if this is just a glitch or not, but if you managed to jump on it when it was 9 cents, you made a killing this morning. Very, very interesting. Anyways, look at Bitcoin is back up above 40,000. We'll stay there. We'll see. Seems to be making a run. I told you I expected one more run as we get towards the end of this month. We could be heading that direction now. It definitely has made a serious run. It's up almost $5,000. Nice. Ethereum, almost up $220. Nice, but look at the percentage change. 13% change, 9% change. These are normal, so let's see if it maintains that. Okay? So we're going to start getting in the area that I spoke about, what was one of my concerns with cryptocurrencies. But anyways, a word from our cryptocurrency seizure. Anyways, Musk says Tesla sold about 10% of its Bitcoin to test the market and will resume allowing crypto transactions when 50% of the miners use clean energy. Okay. Tesla sold 10% of its holdings to confirm BTC could be liquidated easily without moving the market. No, you actually moved the market. That 10% caused a drop. Price of the world's number one crypto on Sunday were trading sharply higher. A digital asset bull, Elon Musk, said Tesla would resume allowing transactions at the vehicle maker's store when the key members of Bitcoin infrastructure can confirm that 50% of its energy came from alternative energy. See again, Elon Musk moving the markets, influencing it to the point where it caught somebody else's attention. The Sunday afternoon tweet from CEO Tesla was part of an exchange where Musk, in an apparent reply to Twitter, massive reference to Cointelegraph's article accusing the technophile of Bitcoin pump and dump. Said that the company retained a chunk of its 1.5 billion initial investment in crypto, but sold approximately 10% to confirm Bitcoin could be liquidated easily without moving the market. It moved the market. We know this. But what happened is by the time Elon Musk pumped his money into it and took 10% back, he did a great job of just covering his butt, because by then the 10% was much higher in value than his initial investment. So he ended up getting a big chunk of that money that he originally invested into Bitcoin back. So basically, he's just covering his own ass. But anyways, here's this right here. Very interesting. Did you see? Elon Musk is catching flack again. But what it is for this time? Well, Cigna CEO, Mewe, lambasted him, saying, "What we have seen with Bitcoin is price manipulation by one very powerful and influential individual." Yes. See, again, my concern with cryptocurrencies. When an individual has this much power over that type of investment, that's a scary thing to be invested in. It wouldn't take much for an individual of his caliber to say something to cause you to lose more than half of whatever you invested in. At the same token, it wouldn't take much for him to say something and cause you to double or triple the amount of your investment. So either way, Cigna criticized Elon Musk for allegedly Bitcoin pump and dump. So this is inaccurate. Tesla sold only 10% of his holdings to confirm Bitcoin. No, it's not. You sold 10%. When there's confirmation of, we already know, Tesla said this, but I was curious about this article, so I went over to see it. This is where it is. Cigna CEO criticized Elon Musk for alleged Bitcoin pump and dump. What we have seen is a price manipulation by a very powerful individual. So, Mewe, one of the richest women in South Africa and the CEO of a financial service company called Cigna, said Tesla, Elon Musk, would likely have been investigated by authorities regarding recent allegations over the manipulation of a crypto price manipulation. Okay. If his target had been almost anything other than Bitcoin. In the interview with Bruce Whitfield, so on a Money Show, she said Musk's recent social media activity on the price of Bitcoin should have made him a subject of investigation by the U.S. Securities and Exchange Commission, which is the SEC, if Bitcoin were more of a traditional company, which, is true. But he has been looked into. You can see right here, it says they have looked into him about his involvement with and manipulation of Dogecoin. The Bitcoin volatility we have seen is an unexpected function of what I would call market manipulation by Elon Musk. If it happens to be a listed company, he would be investigated and severely sanctioned by the SEC. Again, this is just pointing out one of the concerns that I have with cryptocurrencies. Can an individual influence precious metals? Sure they can, but not like this. You might see a dollar movement at best on silver. That's at best. Now, we can have a worldwide squeeze if you get enough people buying into the retail market, causing a shortage on the physical silver. Yes, but do you understand it takes the movement of a lot of people from around the world to make that happen? Not only that, the stars had to line up correctly. We know that they're shorting the market. We know they're manipulating the market. So we went after them. It was a great, great movement. And it's still being affected today. But that took a worldwide effort, not one individual's tweet. There is a huge difference. Going back to, of all, my favorite, Ethereum. All you need to know to decide if this crypto is worth investing into. Cryptocurrencies have skyrocketed in popularity recently, and the trend shows no signs of slowing. Given all the talk around this digital asset, you might wonder whether now is the time to invest. But before pulling the trigger, it's always a good idea to have an understanding of the underlying asset. Cryptocurrency is no exception and is quite different than investing in stock and bonds. Well, yes, it is. That's the one area of investing that I think a lot of people just go by rumors and jump on, not knowing anything about these particular cryptocurrencies. Therefore, we will cover a popular blockchain technology called Ethereum. Like many blockchains, Ethereum has a native coin called Ether. Let's take a closer look at it. Okay, what is Ethereum? Ethereum is an open source, decentralized blockchain technology. Ethereum's native coin is called Ether. This coin is one of the largest cryptocurrencies by market capitalization, second only to Bitcoin. Although Ether has a smaller market cap than Bitcoin, Ethereum is the most widely used blockchain. There's no doubt about it. Newer crypto coins cannot, it's almost impossible for you to create a new token that you want it to be used without adapting to Ethereum's platform. One thing that is important to understand about Ethereum is that it is not the same as Bitcoin. Whereas Bitcoin's purpose is primary to be a digital currency, Ethereum is much broader. In fact, Ethereum is an open source operating system and computing platform. It also supports distributed applications, which is DApps, and smart contracts. Another key aspect of Ethereum is that it enables decentralized finance, which is an important part of how the system works. Because the system is inherently decentralized, there's no single entity controlling it or the value of Ethereum. That's great to hear. That's what I like. That's another reason why I'm a fan of Ethereum's. I just don't trust cryptocurrencies. Like many cryptocurrencies, the price of Ethereum, or Ether, has fluctuated greatly since it was launched in 2015. Back then, the price was around $1 and stayed there for several months. The price reached $1,358 in January of 2018, its highest price ever at the time. The price began to fall, and the price of many Ether bottomed down at $83. So it went from $1 up to $1,358 and then dropped all the way down in December, along with all the other cryptos at that time, to $83. The price is embedded and flowed since then, but it has risen all over. At the beginning of April 2020, the price was $140. Remember, I told everybody in our fictitious portfolio when it was around, was it $147? To drop 10,000 into Ethereum, along with Bitcoin and XRP. On May the 18th, it is around 3,349, according to CoinDesk. That's a pretty hefty increase. I believe it was 4,500 something odd increase. So yeah, it's if you decide to invest in Ether, you should first ask yourself why you're investing. Although the price of the coin has risen substantially over the years, it can be extremely volatile. All cryptos are volatile. Thus, if you buy Ether, simply hoping the price will rise, you may end up frustrated. On the other hand, the Ethereum blockchain can be used for many different applications. Ether is a cryptocurrency required by any transactions made on Ethereum. So you can't even do transactions without using the Ethereum cryptocurrency. The blockchain network of applications. A blockchain, on the other hand, is a technology that with limitless potential. It doesn't rest on Ethereum alone and can be used to make a difference in the future with or without cryptocurrencies. Here's where I think a lot of people that love cryptocurrencies, they conflate or they mix up when they're talking about cryptocurrencies. They're talking about how important cryptocurrencies are, how it's the wave of the future. It's going to be there. Nothing can stop it. No, it's the blockchain technology that makes it important. The cryptocurrencies can be stopped. Again, that might express my concern several times. Some people keep talking about, oh, it's this and oh, it's that, but they seem to be focused more on the blockchain technology, which is good. And I think that's here to stay. But the cryptocurrencies can be manipulated, We can see that governments can't stop it. You can see that one individual's tweet can make it gain in value or drop in value. So Ethereum's blockchain technology is the most desired and the most used. Its Ether coin is something different. Yeah, I'm a huge fan of Ethereum. As a matter of fact, I'm about this close to reinvesting into Ethereum. As of now, I've taken out all my cryptocurrency money. The volatility of the market and that, and plus I'm all in on gold and silver, as everybody knows. I'm expecting something to happen here on June 28th with Basel III kicking in. There's a lot of speculation about what's going to happen, but definitely there's something going to happen between this June 28th and January of next year with Basel III stages being done. First is the European and then the UK right after that on January 2022. So with them removing the ability to manipulate the gold and silver market, we anticipate that the true value of gold and silver is going to start taking shape. Hopefully you guys caught the video I released over the weekend on gold and silver, showing you where we are on the chart and how you're going to be part of the largest transformation of wealth ever. So hopefully you did not miss that video. If you guys are wondering what I'm talking about this video right here. See this guy's speech? You got to watch it. This is a must see for reals. So we're going to listen to this gentleman. This whole article is just what he says here. I do like what he has to say. Let's take a listen.
Well, listen, first of all, sustainability is a big issue for the whole planet, not just for the crypto industry or the Bitcoin mining industry. And when we look at it in context, I think our community needs to do something just like every other community does. Traditional banking, YouTube uses 2.5% of all electricity. That's a crazy statistic. YouTube, we're not going to ban YouTube. YouTube is awesome. I will literally bow down at the altar of YouTube, right? There's unbelievable utility from it. There's also unbelievable utility from the Bitcoin blockchain. It costs a lot to mine. It uses a lot of electricity because it was designed that way. If we want something to secure...
Real quick, because he says something that I'm starting to hear a lot of people talk about. You see, already the government's bucking towards, and in my opinion, that's going to be their excuse if they do head in that direction. Again, if they do. Everything is speculation, okay? If they start looking for another excuse to do away with cryptocurrencies or all the cryptocurrencies, my guess is there's going to be a handful of them that survive. But if they look, one of the excuses is going to be all the energy it takes to mine it. So when I first heard that, I thought, oh, that's interesting. They're just going to use it as an excuse to keep cryptocurrencies from competing with the dollar they want you to have. But then it also dawned on me. When he just said, YouTube uses 2% of all of our electricity. And I said, dang, that's a lot. And I said, oh, wait a minute. You see, that could be with the government going, oh, we're going to this Green New Deal. If they start finding out that their Green New Deal isn't exactly producing the type of energy we need, don't be surprised if they start going around eliminating, platforms saying, oh, we need to do this in order to, in the name of the Green New Deal. Oh, your company uses too much energy. Well, we're going to start taxing you on how much energy your company uses. Well, YouTube uses 2% of all the energy, so they're going to have to pay X amount of tax. They're going to be looking for excuses to tax you, and they're going to say it's all in the name of the Green New Deal. And if you can't pay it, they'll eliminate you. Or they'll use it as a weapon to eliminate those who oppose them. They'll find a platform they don't like, they'll just claim you use too much energy, and then they'll remove you. So again, when I heard that, I was like, I wouldn't put it past our government to start using this, your company uses too much energy, as an excuse to either eliminate opposing platforms that don't agree with their agenda, or them putting on a huge tax for smaller businesses or individuals who can't pay it to eliminate them. Very interesting what he said.
Trillions of dollars of wealth. You don't want a guy with a pop gun, right? You want a robust system. And so I think it's inherent on the communities, the community needs to be responsible to move our industry, like all industries, towards a greener future. And I think you're going to see all kinds of initiatives come out soon.
All weekend, I've been hyping you up as the Warren Buffett of crypto, which is ironic because we all know his take on crypto.
You just heard what he said. We all got to move towards a greener. I can't understand how we've been doing just fine for decades, and now all of a sudden we have this sense of urgency. There's no urgency. All this is just more control. That's all they want, more control.
But you're involved in so many different areas. I don't know if it's a fair comparison.
Well, I am the oldest guy in crypto, and so maybe, Warren is maybe the oldest guy in traditionally, well, Charlie Munger. Listen, we decided at Galaxy that we wanted to be an ecosystem company. And the thesis was, let's take our own money. It started as my family office, and it's now a public company. Our own money, invest in the coolest projects, the cutting edge technologies, in coins, in custody solutions, you name it, we're trying to invest in it. And we want to take the understanding we learn and then transmit that to our clients. Our clients from the investment banking division, our asset management division, our sales and trading clients. And so what I found is everybody who enters this space goes on a similar journey. They start with Bitcoin. And it's like, whoa, this is pretty cool. And they might have different opinions. Is it going to be digital gold or decentralized money? And then they're like, well, what's that Ethereum thing? And as they go down this path of understanding how this ecosystem lays out, we couldn't have NFTs without Satoshi. Like, a lot of the artists don't think they're Bitcoiners. They are. Everyone's a Bitcoiner in this whole ecosystem because Satoshi's white paper gave us this brilliant, kind of one-sentence takeaway. It was the first digital signature you could encounter.
Yeah, there's a spark that kind of lit the whole fire there, and it's an on-ramp for a lot of different technologies.
Yeah.
But you similarly, I guess, have built Galaxy as the on-ramp for a lot of institutions, and you're also kind of in the way that this billion-dollar deal, more than $1 billion deal with BitGo really increases your guys' connections with some of those more established investors. I mean, talk to me about how that changes the landscape, because some people might say that we got to 60,000 in Bitcoin or above it because of institutional money coming in. How important is it?
Institutional money is wildly important. So let me give you some numbers. Total crypto market cap, that's Bitcoin and everything else, is about $1.5 trillion. That's 30 basis points of total global wealth.
That's huge, by the way. But what I would love to know is how much of it is on speculation. In other words, how many individuals are invested in that market cap that are clueless about what cryptocurrencies are?
30 basis points, nothing. Listen, for that to shift to 2%, 3%, which I'm fundamentally in belief that it will, you need institutions. They own all the money. And so Bitcoin is still a 95+% retail dominated ecosystem. Maybe a little less, maybe 90%. But as institutions are slowly moving in, they take time. They don't wake up one night and say, buy me 3 yards of Bitcoin. I mean, unless they're Elon. Right? They put a little in. They do the same thing everyone else has done in this thing. They put something on the board, so they start understanding it more. Then they get more confidence. And what you'll see is you'll see higher prices but get more people entering the market.
Yeah, it sounds like we're kind of stuck now in this $35,000 range when it comes to that. And some people might point to the ESG concerns that institutional investors have as maybe a problem to get back to where we were before. I mean, do you see that playing out, or how big of an issue is it?
What happens in markets is you get a new group of investors that come in, they get excited, and then they push the market higher. So if you think about when Paul Tudor Jones bought Bitcoin, and he famously published that paper, I think Bitcoin is about $8,000 or $9,000. A lot of hedge funds got into that zone. Well, a year later, it's at $60,000. The urge to ring the cash register is such a deep-seated human urge that's what happens. People made a lot of money in something, they sell some. They sell some to buy a house, to buy their girlfriend a ring, to diversify their portfolio so they're not 90% Bitcoin, right? And so we see these kind of step function moves, and then we'll see a long period of consolidation. And what happens there? You're turning over, old guys selling, new guys buying, and you're waiting for the new narrative to arrive. That brings the next wave of money in. And I think we're in one of those periods right now.
When we look beyond Bitcoin too, obviously there's a lot of enthusiasm in DeFi and some other chains. I know you guys have invested in a lot of very cool projects. Terra is one that we've discussed too before. I mean, how important is that? Maybe, I don't want to say it's stealing the attention away from Bitcoin, but maybe the enthusiasm there for what the future looks like in attracting capital.
Listen, and one of the way markets work is when energy pushes them up, supply responses happen. What happened in 2017 is everyone thought everything was Bitcoin. Litecoin was the poor man's Bitcoin, right? Ethereum was the better Bitcoin. Floyd Mayweather coin was the boxing Bitcoin. And so you had this giant supply response which collapsed prices. This time around, we've learned some, but not enough, right? You can differentiate the type coins, right? There's store of value coins. I'd put Bitcoin in that thing, but I'd also put Litecoin and Dogecoin. And I think those things pull away from Bitcoin.
Tell us about the donation.
Did he say that Dogecoin and Litecoin pull away from Bitcoin? Here's the thing. If you have competing cryptocurrencies, they're going to pull away from your version of a cryptocurrency regardless. So again, the biggies I think are going to survive. Once whatever this event is that's coming up and the cloud or the dust clears, you're going to see Bitcoin, Ethereum, XRP. There's no doubt that those three for sure will survive. I'm starting to, Polkadot and Uniswap, I have a feeling to be there. And Theta is the other one. The more I know, don't get overly excited. The more I research and find out about this coin, the more I'm very, very excited about. I'm not done before I start jumping on that bandwagon. Now, it doesn't make a difference how early you get in on this. The point is, if you believe in these particular cryptocurrencies, they're like the blue chips. They're going to be the blue chips of the cryptocurrency world. So, again, as the person I'm speaking to continues to enlighten me as far as cryptocurrencies are concerned, the more I'm starting to get an idea of where I'm going to diversify if I indeed can be convinced. Again, this person has not addressed all my concerns about cryptocurrencies. I'm not quite there yet. But without a doubt, the bulk of my investment, once I do turn to cryptocurrencies, is going to be into Ethereum. So far. So I'm not done. I love how people think, oh, you're flip-flopping. No, I've been consistent about what I said. Anyways, this is very interesting right here. Very interesting. Now, I understand why they're doing it, but if other countries start doing this, this really damages the dollar. So it says tourists told to leave dollars at home as Cuban banks will no longer accept greenbacks. Okay, so I love this because this is the Cuban government talking about the Caribbean. Cuba has asked tourists not to bring dollars with them to the Caribbean islands, as U.S. currency will no longer be accepted in the country, according to the first vice president of the central bank. So basically what's happening is this is the response to some embargoes and some sanctions. It costs them too much to convert. They don't want you bringing U.S. dollars. Why this is a big deal is, well, if you think about how many people go to the Caribbean to visit, it's a tourist attraction. A lot of people go there. But if your U.S. dollars are no longer being used there and you're forced to go to an alternative dollar, what's that do to the U.S. dollar? I mean, this is just a small portion. This is just the Caribbean islands. You can't even go to Cuba without permission. Anyways, a lot of my friends are Mexicans. They go into Mexico and then fly from there into Cuba, which is a slick idea. Anyways, it's a place I want to go to before they finally, I think, will cater in. I shouldn't say cater in, but give in. And eventually will open up to the United States. But before then, if this made me think about something, if more and more countries start refusing to accept the U.S. dollar, that's just going to weaken the dollar. That's just another pin in the dollar and why we should be invested in the gold and silver. Again, this is the Caribbean islands. It's not that big of a deal, but it did make me think about this. If we start seeing China, Russia, Cuba, other people turn away from the US dollar, it's going to weaken the dollar. And if the dollar is weakened, what does that do to us? It lowers our purchasing power. Our dollar is weaker. Again, I can't stress enough how important it is to have some version of your portfolio invested into precious metals. But the article is very interesting. No longer accepting greenbacks. This is their way of countering these sanctions that are being pushed against them. So, anyways, very interesting, I thought. Look, I want you to listen to just the beginning, a little bit of Miles Harrison, what he has to say, what's going on with the market on gold and silver. Won't be long. Let's listen to a couple minutes.
Now, for gold and silver, we've seen gold down 0.7% this last week, whereas silver has gained modestly. Onto our macro indicators, and we can see the Fed's balance sheet creeps ever higher towards $8 trillion. Deficits.
$8 trillion. The higher that Fed's balance sheet goes up, when they go to revalue gold and silver, or I should say gold and silver shortly behind it, the higher the value in the gold. So keep on keeping on Fed's balance sheet. The only way you're going to wipe out that debt, first of all, is devalue the dollar. Yeah, that's what they do. You see, for them to pay back the debt, they devalue the dollar, which means they spend less dollars to pay more debt. In order for them to be liquid, they're going to need to revalue gold. Be on the right side of history on this one. It's going to be the largest transformation of wealth ever.
Up, debt up, and the dollar up slightly. Meanwhile, if we have a look at the gold chart, well, we can see that we've had a retest of the uptrend that the gold price has been in since late March, early April, when it hit that low. Now, as we can see here, the crucial level is really that 1900, and there.
Wait, I want you to see something. Look at these dips here. Look at that. This is a massive drop at one time. Then it goes back up. So that's the thing about gold and silver. See, even though they're being manipulated, look at these drops. And then they recover real quick, another drop. Then it starts to go up, and then you see these hits. These long straight lines of red. Yeah, this is just crazy. Crazy.
Really is this desire to keep the gold price below 1900, it seems. So the question is, are we going to see gold break down on this trend line? And a break of 1870 would appear to do that. And we then could be retesting that heavier drawn downtrend that we've been in since August last year. So that may look at a retest at around 1840 or so. Of course, movement upwards and holding that 1900 level would suggest that it's likely to be onwards and upwards. Looking at the gold miners ETF, we can see the GDX just forming this lovely wedge here, and it does suggest that we may well see a movement upwards.
Okay, a lot of you said, Pimpy, can you please do the stock watch again? We liked it because it talks about the different investments in the miner stocks. So you guys know I swapped computers because my other one crashed. So I lost that spreadsheet, but I can recreate it. I'll just go back to my old videos and look at them and then go ahead and recreate them. And then I'll start doing them again. There are a lot of you asking about miner stocks because if the doo-doo hits the fan, we know gold and silver will benefit. But we also heard in the guy on the video I was talking about, you guys go back and watch that I released over the weekend. He told you the other great thing to be invested in as far as stocks are concerned was miner stocks. So then a lot of you said, whoa, 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 hey, Pimpy, whatever happened? That's what happened. My other computer crashed. So a lot of the information that I was using is lost. But I can recreate that spreadsheet, and I will. And I'll start doing that again.
GDX price is trading almost in line with the 30-day moving average there in blue. So that's quite interesting to note. Whereas the gold price is, of course, trading above its 30-day moving average. So once again, we seem to be seeing gold miners moving ahead of the actual gold price.
Yes.
Moving on to silver, and we can see, well, the crucial level here
Oh, look at
is
this.
$28. Look how many it's...
Look how crazy this is. Look at this. Whoop. Look at this. Oh, yeah. Still going up. This is a crazy, crazy graph. And again, look at the red lines. Look at this. Going up here. Look at this drop. Wham. Again, it starts to go up. Look at these drops. Talk about trying to hold a beach ball underwater. Look at this. It's about to break out. It's still staying around the $28 level. Very interesting.
Look how many times we've seen the silver price slap back down from
Yep.
that $28 mark.
Good try.
Now, gaining that $28 area and holding that would be absolutely huge. We can see it's being defended almost at all costs here. And this really does look like a great looking chart, which really does suggest that we may well be able to see a big move out soon.
Yeah, but again, every time we see it go above the $28 mark, they smack it back down. But it just recovers. It recovers quickly. This is a great sign. This is that this dollar amount is being supported. How you could go to your retailers and see how much they're charging for you to get an ounce of silver. Some of them earn the $40 per ounce. It's being supported. So $28 isn't crap. If it's being supported around the $40 because people don't mind paying the premiums, what's that tell you about the true value of silver? We all know where it's going.
And just extending that, if we move it on to have a look at the SIL, Silver Miners ETF, well, once again, this looks extremely positive. Very, very bullish chart if we get a break of that downtrend that we've seen since August last year. Meanwhile, we've seen Treasury yields down quite substantially.
Okay, I just wanted to show you that. So, again, look, it's looking very good for gold and silver. It is. And to all you crypto people, seriously, you guys, you'll see. We'll see what happens, all right? That's it for now. You guys are going to take this phone call. Hey, hit the thumbs up button if you haven't and subscribe if you haven't. I'll catch you later. Bye.